Good morning, everyone. This is Adam Welch here with Insurance Agency Marketing Services, working in the life marketing side of things here. Thank you, everyone, for joining us here today. We are going to be taking a look here at some solutions using qualified single premium life products. So, I know there's a lot of interest. We're coming up on crunch time here for tax season, and kind of the buzz items out there surrounding these qualified funds. There are certainly some additional opportunities that are presented out there around this time of the year. So getting clients thinking about some different things and some different planning strategies. So we're going to take a look at one item to address some common concerns that we're hearing out there. But again, thank you everyone for taking some time here. My name again is Adam Welch, life marketing here at Insurance Agency Marketing Services. We are going to, as I mentioned, go through and look into qualified single premium life products. Before we get into the bulk of today's presentation, I want to touch base on a couple of housekeeping items. First of all, as we're going through here, if there are any questions that may come up that you'd like to have addressed here on the webinar today, please don't hesitate to type those in your question box in your control panel there and send those over. We'll be stopping and checking for questions here periodically as we go through. So more than happy to address those questions. If it's something that you're not necessarily sure if it's something that would be applicable to the audience in general here, if it's something more on one-on-one basis, I will be following up with everyone here following the webinar as well. So certainly keep those in mind and ask away when I reach out to you to follow up. So certainly happy to answer any questions. All right, so before we get going in the bulk of today's discussion, I want to touch base on a couple of items and some great incentives and services we have available for you here at IAMS. The first of those being our new producer bonus. So looking through here, see some familiar names and also see some new ones. So anyone that's new to us here at IAMS, recently appointed, we want to reward you for your first pieces of business that you write with us here at IAMS, and thank you for that business. So we have a great new producer bonus program here to do just that. We have 3 different levels of rewards to choose from, as you can see here. We have the bonus at the $100,000 level, $300,000 level, and $500,000 level. Just hitting on a couple of these here quickly. The $100,000 level, you can choose a nice $750 cash bonus. Get you a 2-year subscription to a website, so we'll build your own website and newsletter service, and that's good for 2 years. You can get the latest generation of the iPad and stay current with that ever-evolving technology. The $300,000 level, you can choose a Social Security planning program and mail drop, 3,000-piece mail drop, $2,000 in marketing reimbursement funds to help you promote your business and generate some more business, or that $1,500 gift card there. $500,000 level is certainly some great rewards here, and some great rewards that would pay off to help you continue growing your business. You can see there's a couple of seminar programs there. You see a 5,000-piece mailing and seminar coaching with Matt Gill, or a 4,000-piece mailing and seminar coaching with Dave Pemper. Both Matt and Dave are top producers with us here at IAMS. They are in the field working day in and day out, just as you are, and they have developed their marketing system around seminars and seminar marketing. That's how they get their new business and generate new leads. They've developed their own seminar approaches. These are significantly different seminars, so depending on the approach and a type of presentation you want to deliver, you have a couple of options there. But these are both great seminars, very effective. And again, Matt Gill and Dave Pemper both are consistently top producers with us here at IAMS. They always qualify for all the trips and top producer escapes that we hold. So you hit that $500,000 level of the new producer bonus. Those are some great rewards that will pay dividends in your business going forward. Additionally, you hit that $500,000 level and you want to take a trip and celebrate, you can customize your own personal getaway with Ritz-Carlton Travel Rewards. So that's our new producer bonus program. Again, our way of thanking you for submitting your first pieces of business with us here at IAMS. We definitely want to recognize you and reward you for that. Okay, I mentioned our top producer escape just a minute ago. We do have our 2018 Top Producer Escape planned. It's going to be held out at the Boulders Resort and Spa out in Scottsdale, Arizona. So you can see the dates there, February 25th through the 28th of 2018. This is a fantastic location. I can't say enough good things about it. I've been out there myself, and it's just tremendous. Gorgeous setting in the desert up in North Scottsdale. Fantastic golf courses, tennis courts if that's your thing, great spa, pools. It's really a top-notch resort, and definitely a great opportunity to get out there and get some rest and relaxation on our top producer trip. So you can see how you can qualify for that trip down at the bottom of the screen. Any combination of business that you write with us. So anything that you submit with us here, we want to recognize you for that, reward you for that, and give you credit towards our top producer escape. So $2 million in annuity premium, $1.5 million in single premium life, $175,000 in life target, and you can see some of the other requirements there as well. But the thing to remember is you can qualify with any combination. It's not one or none. It's any combination that you write with us here at IAMS. We will credit towards that top producer trip. So give us a call. Let us know what we can do to help you in your business and get some business in here, get you up and running and get you on your way towards qualifying for that top producer trip. All right, the next item I want to visit with you about, and it's actually going to bring us to our first poll question. Do have a couple of poll questions, and when I launch them, I just ask that you take a quick moment to respond yes or no. Helps us out quite a bit here, but we are big on training here at IAMS. With our webinars throughout the week and training meetings, we have our upcoming Life and Annuity Academy. The next one is scheduled May 17th through the 19th, and we have a couple more on the books this year. So if this one may not be of interest or may not work with your schedule, we do have a couple more. Be sure to call us for those dates. But the next one coming up here, coming up pretty quick, May 17th through the 19th again. This is not a product-specific training. And actually, take a quick look at that screen, and I'm going to go ahead and launch our poll here. Again, if you wouldn't mind taking a quick moment to respond to this, simply, are you interested in attending our All Expense Paid Life and Annuity Academy? And I say all expense paid. We're going to bring you in for a couple of days, go over some sales and marketing. We take care of flight, hotel, meals, all of that. And it's just a couple of days out of the field for you, but we understand your time's valuable. We're pulling you out the field. We want to make sure we're giving you some great information, some great marketing ideas and concepts that you can take away and implement into your business. So we're going to throw a lot out there. Our hope is that you're going to take away, be it a new seminar approach or a new sales concept using life insurance or single premium life or an annuity, to get back out there and increase your production. That is our primary goal here with these meetings. So it's not going to be a product and, here's this product and the ins and outs of a specific product. It's not going to be that type of training. This is, again, more sales and marketing oriented, giving you some tools to take back and increase your business. On the new producer bonus, I mentioned those seminar programs with Matt Gill and Dave Pemper. Both Matt and Dave will be joining us at this meeting and going over their seminars. So a great opportunity for you to view their approach and their seminar system and how they've had such great success in using their seminars and generating new business and new leads. We're also going to take a look at some different software programs, planning software that you can take back and implement and show more of a holistic approach to your recommendations instead of maybe just going out there and pitching a product to a prospect. You can actually illustrate how that product is going to impact their overall situation. different wealth transfer tools and wealth transfer concepts. So a number of great items there. And again, it is all expense paid, so we'll take care of your flight, hotel, and meals and all of that stuff. It just costs you a couple of days out of the field. So with that, it looks like a majority of you did respond. Thank you very much for taking that the time to respond there. If you haven't yet, I'm getting ready to close this down so we can keep you moving. So if you would just click yes, and I should mention yes is not committing to attending. Yes is just simply saying I'd like some more information. So if you do click yes, we will, following today's webinar, we'll get the application link out to you with some additional information and agenda, so you can see a better idea of how the time will be spent out there. But with that, looks like we got a few more, so thank you all for responding to that. Those of you that responded yes, we will get some additional information out. I'm going to go ahead and close this down, and we can continue on here. The next item, we have a great creative department here. Many of you actually may not be aware of our creative department, but we are really committed to helping you build your brand and help you with your marketing efforts out there. So you can see a quick overview of the different areas that we can assist you with. If it's just basic marketing, building yourself a logo and a brand and business card, we can assist you in designing those items for you. Any print marketing for direct mail, stationery, things like that. We can set up a website for you on online marketing and start helping you go more digital and generate some leads from your website and online marketing. So a number of items there. Jen and Josh in our creative department do a great job. If you'd like some more information on what we can do for you on the creative side to build your brand and your image out there, please don't hesitate to give us a call and ask for Jen or Josh in our creative department. They'd be more than happy to visit with you about what we can do for you. Okay, our website, great resource for you here, www.iamsinc.com. A number of great items out there available for you 24/7. Everything from sales tools to term quoter. Those of you that are writing term insurance, we are more than happy to run those quotes for you, but if for some reason you're in a pinch and need one right away, you do have access to the term quoting engine on our website, and that's actually what all of us in the life marketing department use to quote your term policies out there. So you can get a quick comparison of different term products, pull down the forms, applications, links to different industry publications and resources out there. Our annuity, life, and long-term care product grids are all out there as well. So number of great resources available on our website. That is, again, a great resource. It's available 24/7. Any questions on that or need any additional information from something you found on our website, of course, please don't hesitate to give us a call, but that website can be a great resource out there for you in the field. All right, Easy Money Now. So we do have a number of different rewards and incentives out there, and these are two of our more popular ones in addition to our new producer bonus. Those of you that are established with us here at IAMS, just a quick refresher here, we do have a Refer Producer program. So just like you out in the field, the highest compliment you can possibly receive is a referral from an existing client. It's a great endorsement that they were willing to pass you on to maybe a family member or a colleague or an associate of some kind. The same holds true for us here at IAMS. The most qualified lead we can receive is a referral from you. So it tells us that we're doing a good job and you want to spread the word and get your associates in there. Maybe could be trying to build up an agency, but you're a little hesitant about the liability that comes with having a number of agents and producers working underneath you. This is a great way to accomplish that as well. So how this works, once you pass along your referral and they contract with us, we're going to give you a little bonus once they contract. And then we will pay you a bonus when they write their first piece of business, and then continue paying you an override on that referral's business as long as they are writing business. As long as you're still contracted with us and that referral is writing business, you will get an override. It's important to remember that override's not coming out of your referral's commission check. That's coming out of our pocket directly to you. So again, we want to reward you and thank you for trusting us enough to pass on our story and our message to any referrals to work with us. So you can see in that example, definitely potential for some big dollars to be paid out on that referred producer program. You refer 3 producers over, they're all $1 million annuity or single premium life producers. That means an extra $6,000 cash in your pocket for passing them along. So great way to get a little supplemental income there. Additionally, we also have our marketing reimbursement program. This is a fantastic incentive, and we're really trying to get the word out there. And we want you to take advantage of these marketing reimbursement dollars. So how this works is, as long as you're contracted with us, you're writing business with us, we will set aside, based on the type of business and the amount, we will set aside X amount of dollars into a marketing reimbursement account for you. Those dollars are there for you to use however you choose, as long as it's marketing related and geared towards building your business and generating new business. We will help you cover some of those marketing expenses and potentially cut those expenses in half. So if you're out there doing seminars, you do a direct mail drop, you hold a client appreciation event, we have producers that'll consistently write with us, and then towards the end of the year, they plan a client appreciation event, and they have a fair amount of marketing reimbursement dollars banked. They do their client appreciation event, cut the expenses for that in half. Great way to, again, promote your brand, promote your business, and generate and grow your client base. So that's our marketing reimbursement program and our referred producer program. Again, a couple of other ways of us for us to say thank you for your business and reward you here. Okay, IAMS Wealth Management. Some of you may be familiar with IAMS Wealth Management. Some of you may not, but this is a relatively new endeavor for us. It actually brought about for preparation with the upcoming DOL ruling. So we created a registered investment advisor in IAMS Wealth Management, really just to be proactive for that ruling and to give you another arrow to differentiate yourself out there in the field. So if you're interested in adding the asset management business to your offering for your clients, if you're maybe currently just insurance and annuity only producer out there, but want to add something else out there to help your clients further in the fee-based asset management system in business, we can help you out with that. So whether you're currently Series 65 licensed or in that business, or if you're not, we can help you get up and running, get the materials out to you to study for that 65 and get you ready to add wealth management services to your business. Very advisor friendly. You know, IAMS 31 years of helping the independent producer. Our vision when we created IAMS Wealth Management is to make sure that it's an advisor-friendly investment advisor. So with that, it brings me to the second poll I wanted to launch just quickly here, if you wouldn't mind taking a quick moment. If you'd like to learn more about IAMS Wealth Management, like a little bit more information, Charles Hiring Jr. In our office heads up the wealth management side. Great knowledge base of how to get you up and running and how to implement this into your business. Again, that this is the direction of the business that we believe will probably need to take place here because the DOL. Another great way, you know, being a wealth manager and adding these fee-based management system services to your business, it's going to set you apart as a fiduciary. Not that you're not already acting in the best interest of your client, but this says that you have to. So that's very comforting when you're sitting across from a new prospect. They know that you're going to be acting in their best interest as a fiduciary when you add the fee-based asset management to your business. So, okay, a fair amount of you did respond to that. Appreciate that. I am going to go ahead and close this on. I want to be respectful of your time here, so we are going to continue moving on. But again, that's IAMS Wealth Management. If you have any questions, you can see the phone number for our wealth management side here, 888-255-7670. Feel free to give that team a call. Be glad to answer any questions, get you a bit more information, and talk to you about how you can implement that into your business as well. All right. So today, we want to look into qualified single premium life. Kind of mentioned it's tax time, and I'm sure there's a lot of questions and things that have come up around IRAs and qualified funds and some different planning out there. And we're hearing quite a bit about that. Agents calling in, asking about some different options for clients that may have an IRA that they don't need for income. They have to start taking their RMDs. They just turned 70, and they really don't need the RMDs. They don't want to add that to their tax obligation. So what we're going to look at today is a couple of solutions here to address some of those problems and those needs. So the problem out there, clients with qualified funds, they're not taking distributions from, they don't plan on taking distributions from. Life happens, things change. Maybe they have a nice pension and Social Security, and that is sufficient for them to live on. They don't need these funds set aside in their IRA accounts to live on anymore. They're more interested in passing that to the next generation, to their beneficiaries, want to do that on an efficient basis. So those qualified funds still sit out there. They're not drawing the income from it. They're just taking the RMDs, and that's it. Eventually, those funds are going to pass to the next generation fully taxable. Additionally, a lot of your clients may know that they need long-term care. Not interested in paying the high premiums of a traditional standalone LTC plan, or they're maybe just not sure that they're really going to need it and don't want to pay premiums on something that they may not even use. Single premium life could be a very viable solution in those instances. Allows you to hit a couple items with one solution here: wealth transfer and long-term care needs here as well. So the problem, the solution. The solution very well could lie in a single premium life product, more specifically, a combo product that is designed to address the qualified fund issue there. So these combo products are not medically underwritten. They're simplified issues, so there's no paramed exam or labs involved in the underwriting process. Currently, of our dozen carriers that we have for single premium life, 3 of them have products that are set up and geared towards accepting qualified funds in the wealth transfer market. So we have National Western, Baltimore Life, and Equitrust. Those are the 3 products that we're going to be going over today, giving you a quick overview and give you a bit more information on here. Additionally, if clients in good health and they're certainly not averse to going through a paramed exam and a fully underwritten traditional life insurance product, there's a solution there too. And kind of create your own combo product, if you will, with a SPIA to fund the life insurance policy. So you choose a SPIA product, and then pair that with a universal life product or an IUL or a whole life product of your choice, and kind of customize that for your healthy clients that are not opposed to going through that paramed exam. Additionally, a number of these products will already have some accelerated benefits built in. Some of them will also have a long-term care rider that you can add on that'll pay out a percentage of the death benefit for qualified long-term care needs. So again, for the healthier clients, you can kind of customize your solution. So the first product we want to take a look at here, this is the Lifetime Return Solutions from National Western. So you can see National Western, A-rated company by AM Best. They're based out of Texas. Some quick specs on the Lifetime Return Solution. It's an indexed UL funded by a single premium immediate annuity. So these 3 products that we're going to be talking about today, they're all going to be those combo products. So on the surface, it's going to look like a single premium life policy that you may be familiar with. familiar with. But behind the scenes, there's a single premium immediate annuity that is going to fund that life insurance policy. This particular plan issues up to age 85, so a little bit unique in that respect. The way the SPIA works, anyone there's a typo on there. I do apologize. Needed to update that. But ages 80 to 85 is going to fall into that 5-pay option. Everyone does have the option for that 5-pay. And then the 10-pay option is available up to age 80. So we get in above age 80, we're going to default into that 5-pay option. But you can choose that SPIA over 5 years or 10 years to fund that life insurance policy. Minimum face amount is $25,000. The maximum face amount, it's going to be based on the net amount at risk. And you can see the net amount at risk broken down there between the issue ages. This product does have an accelerated benefit rider for terminal illness as well. So they will accelerate up to $250,000 or 75% of the death benefit in the event that the insured is diagnosed with a terminal illness and needs access to those funds. The underwriting for the National Western Plan, Table 5 is rated up to standard. So anything through those first 5 tables will be issued at standard. It's not medically underwritten. There's the paper application and then the phone interview. And something that's great and kind of unique out there, they will provide an instant decision on that phone interview. So when we're considering the long-term care need and that potential issue, where we're underwriting for morbidity. In this case, it's life insurance product. We're underwriting for mortality only, so not morbidity in that case. You can see commissions here. We throw the commissions up here, but we do certainly encourage you to call in and verify, because sometimes they can vary from state or age, and just make sure you have the updated commissions. But you can see very generous, but they do trickle off here as the insured ages up to age 85. So starts at 11, 45 to 75, and then 4.5% down to 81 to 85, but still very competitive, very attractive commissions there. Some unique features of this, as we just saw, anything that would fall in those first 5 tables rated up to standard. You're going to get that instant underwriting decision on the phone. You do have some access. While these are wealth transfer products and really not designed to dig into the cash if at all possible, if you do need to, however, and kind of a last resort, do have access to 10% penalty-free withdrawals. Benefits here, you're going to take those qualified funds and you're going to turn those into income tax-free benefits to your beneficiaries, to your client's beneficiaries at death. So you're taking those qualified funds, they go into the single premium immediate annuity. It pays out over the course of 5 or 10 years in this instance into that life insurance policy. That life insurance death benefit will be transferred tax-free, because it's life insurance, income tax-free at death to beneficiaries. Going to get the tax deferral on the cash value in the contract, so you don't have to worry about any further taxes if in that respect, so great accumulation in that respect. It is an IUL, so you do have those index-linked returns. Liquidity in the form of accelerated benefits for terminal illness, and those penalty-free withdrawals we just saw. And definitely helps and puts the beneficiary in a better position taxation-wise than had those funds stayed in an IRA in a qualified account and passed to them. So definitely a more efficient transfer. The second product we want to look at here is the Generation Legacy. This is a product from Baltimore Life. Baltimore Life, great company to work with. Doing quite a bit with Baltimore Life right now. They've got a pretty competitive product. They are out of Maryland. Product specifics here. So kind of similar to the National Western, varies in certain areas here. Still a combo product. So you're going to have that single premium immediate annuity funding the life insurance policy. Again, it's all taken care of behind the scenes. So on the surface, it looks like a traditional single premium life product. Depending on the insured's age is going to determine the length of the SPIA payout. So there's going to be a 7-year payout, ages 75 to 80. Anyone below 80 down to 60 is going to be put on that 10-year payout plan. So this certainly allows a great way to I don't want to say defer the taxes, but spread the tax obligation out over 7 or 10 years versus taking the hit all up front in 1 year if they were just take that IRA and cash it out and put it into a single premium life product for traditional single premium life product for wealth transfer. This allows them to spread that tax obligation out, make it a bit more bearable for them to remove that tax issue for the beneficiaries. This is a whole life plan, so it's an interest sensitive whole life product. Minimum premium, you can see there it's based on the SPIA payout, $5,000. The maximum death benefit that they will issue on this plan is $450,000. This one has some additional long-term care benefits built in. So different accelerated benefits. Not only does it have the terminal illness, but it also has nursing care and chronic care or home health care. So terminal illness, they will accelerate up to 75% of the death benefit. You can see for all 3 accelerated benefits, the maximum is going to be $250,000. If the insured is confined to a qualified care facility and needs that skilled nursing care, they will accelerate up to 50% of the death benefit. Again, up to $250,000 maximum. And then if the insured needs that extended care or home health care, they can't perform 2 of the 6 ADLs, they will, again, accelerate 50% of that death benefit. So very attractive accelerated benefits there. I know that's a hot button issue. Hear that request all the time here as we're talking to folks out there in the field. So this is definitely a great combo product that can really hit a couple of different hot button issues in terms of wealth transfer and providing potential coverage for long-term care. Pardon me. As far as underwriting goes, kind of similar. It's going to be non-medically underwritten, so it's a simplified issue. Anything in the first 4 tables is going to be rated up to standard. Again, this one has a phone interview, and they will provide a immediate decision on that phone interview. So you're sitting down with your client, you fill out the application, you call in to the call center to complete that phone interview, hand the phone to your client to go through the interview. Once they're done, client will hand the phone back to you, and the individual that conducted the phone interview will give you, the agent, that immediate underwriting decision, accept or decline. So just to think about that for a moment. You're sitting out on the appointment with your client. You walk in there to take the application. You can walk out there knowing that you've made the sale and it's accepted. All that's needed at that point is to get the application off to us, and we will get it off to Baltimore Life and take care of the transfer of funds from there. So very quick turnaround, very seamless process in that respect. Again, we're underwriting mortality, not morbidity. So thinking about the long-term care need and those accelerated benefits, we are going to look at the mortality versus morbidity factor. Tax withholding. In this case, the taxes cannot be withheld from the SPIA payments. So this is actually a question that I'm going to go ahead and address here. I did come across earlier, but the taxation issue with the SPIA. So the client will receive on qualified funds, that full amount is going to be taxable. If it's coming from an IRA, that full amount of the SPIA is going to be taxable. So the client's going to receive a 1099 on that SPIA payment each year for the 7 or 10 years in this case with Baltimore Life, spreading out that tax obligation. So in this case, taxes cannot be withheld from the SPIA payments, which is actually advantageous. It allows for a little bit bigger death benefit on the life insurance side. The SPIA and death benefit with this product are payable at death. So if the client passes away during the 7 or 10 years that SPIA payment is funding the life insurance policy, Baltimore Life will pay out the face amount of the policy. So the death benefit will go income tax-free to the beneficiaries, and then any remaining SPIA payments will also go to the beneficiaries as well. So the SPIA, again, is going to be taxable. So beneficiaries, they'll have a little bit of tax situation if that SPIA is going to be paid out, but not near as bad as if that qualified money was just left in a qualified account and passed on. So say that one more time. The face amount, the death benefit of the policy is going to be payable income tax free. The SPIA amount will be passed to the beneficiary as well, but any remaining SPIA amount will be taxable to the beneficiary. Okay. Commissions here, very generous, a bit more straightforward here. Ages 60 to 74. So one thing to mention here, minimum issue age is age 60 for this product. Maximum issue age is 80. 60 to 74, they're going to pay 14% to the agent, and 75 to 80, 12%. So very lucrative opportunity for both client and you out there working with your clients. So great, very competitive commissions with Baltimore Life. Some unique features of the Generation Legacy. You're going to get that immediate underwriting decision. So they're running about a 90% approval rate right now. They underwrite up to table 4, so can accommodate some folks that may have some impairments out there, but nothing drastic. They will underwrite up to a table 4 that's issued at their standard. Have the lump sum accelerated benefits. So what we just saw, that terminal illness, accelerated benefit, qualified nursing care or home health care needs, they're going to pay that lump sum accelerated benefit to the insured. Another great feature of this, the SPIA, client doesn't have to worry about getting checks from that SPIA and then turning around, sending them right back to the insurance company for that life insurance policy. It's all taken care of behind the scenes internally. So they don't have to worry about missing a payment on the policy or anything like that. The SPIA is going to pay directly into the life insurance policy. And that's going to eliminate any ongoing funding requirement from the client. So there's no annual premiums. It's essentially going to be a paid up policy. As long as no loans or withdrawals have been taken that would threaten a policy lapse, they don't have to worry about the annual insurance premiums, which is fantastic from a budget perspective. Benefits here, of course, you're going to get that tax-free transfer at death. So, what we're talking about here, taking qualified money and turning that into a tax-free benefit to beneficiaries. Tax deferral on the cash value, again, it is life insurance. Any cash value that builds up there, it's going to be tax deferred. Don't have to worry about paying taxes on that growth. It's a whole life product. So you're going to have the guaranteed cash value, know what that cash value is going to be each year. You do have liquidity during the insured's lifetime with the accelerated benefits for long-term care needs and access to the cash value via policy loans. Again, they do have the access there. I would encourage you to use that as an absolute last resort, because this is certainly a wealth transfer product, not really designed to dig into the cash if at all possible to avoid. Of course, it's going to result in a better tax situation for the beneficiary here, as those death benefits are passing income tax free. All right, the third product we want to take a look at here today is the Wealth Pay. This is from Equitrust. So Equitrust, based out of West Des Moines. I'm sorry, just Des Moines. Some quick highlights of the Wealth Pay. Again, it's another combo product, so it's going to be a life insurance policy funded by a single premium immediate annuity. They have a few different options here for the length of the SPIA payout. They have a 3, 5, and a 10 pay option. It is going to be determined by age. You can see the age requirements for the 3 and 5 pay. Those are available up to age 80. The 10 pay is only available, as you can see there, up to age 75. Minimum issue age, again, is 60. And you can see that exception. Male with a tobacco rating, ages 60 to 70, are going to be the age limits for that 10 pay. Otherwise, they're going to drop into that 5 or 3 pay scenario. So When we talk about the different pay periods, that's really important because we're talking about how long that tax obligation can be spread out for your client. It's either going to be over 10 years, 5 years, or 3 years with the wealth pay. Generation legacy was 7 or 10. So, we talk about not wanting to take that tax obligation, that tax hit all up front in 1 year for your client. You want to spread that out. Ideally, you want to spread that out over the longer period. It's going to minimize the taxes due each year. So that's something to keep in mind when you're considering the different SPIA payment periods and the funding periods for that life policy. This is an index product. So you do have the opportunity to earn some higher interest rates than perhaps an interest-sensitive whole life. You can link the cash value growth to different index allocations and those strategies. The minimum premium is going to be $25,000. Maximum death benefit is going to be $500,000, $500,000. Again, with this product, do have great accelerated benefits built in for terminal illness, chronic care, and home health care. So you have that terminal illness, they will accelerate 50% of the death benefit during the SPIA payout. 75% of the death benefit during the SPIA payout period. So if the insured is diagnosed with a terminal illness while that SPIA is paying out over 10, 5, or 3 years, whichever it is, they will accelerate up to 75% of that death benefit. After the SPIA payout period, they will actually accelerate up to 100% of the death benefit. For chronic care and home health care, they do have accelerated benefits as well. You can see 25% of the death benefit during that SPIA payout period, and once again, 100% after they've reached the end of that SPIA payout. So very generous liquidity for those needs in the wealth pay here with Equitrust. Underwriting, kind of consistent with what we've seen from the other two here. Table 4 is rated up to standard. Again, it's simplified issue, not medically underwritten. So you fill out the paper app and complete the phone interview. Equitrust, they don't provide the immediate decision, but they do provide an underwriting decision in 48 hours. So you still have a quick turnaround time on the underwriting decision there for your client. And once again, the standard theme here, when you're comparing this to a traditional standalone LTC policy, we're looking at mortality, not morbidity, because this is life insurance. It just happens to have those accelerated benefits built in. Certainly not a replacement for long-term care, traditional long-term care, but can be a great alternative to provide some very lucrative liquidity in those instances. Tax withholding. With the Equitrust plan, those taxes can be withheld from the SPIA payments, but that very well could reduce the amount of life insurance that is purchased from those payments. The SPIA payouts are fully taxable if they're qualified. So the full amount of that SPIA payment, if it's a qualified fund from an IRA or other qualified account, would be fully taxable to the owner. The SPIA and death benefit with the wealth pay plan, like we saw with the Generation Legacy from Baltimore Life, they are both payable at death as well. So the death benefit from the life insurance portion is going to be passed income tax free, and similar to what we saw before, if the insured passes away during that SPIA payout period, that SPIA amount is payable, but it's going to be taxable to the beneficiary. So commissions here still very lucrative. Once again, minimum issue age 60, maximum 80. Ages 60 to 75, they will pay the agent 11%, 76 to 80, 6%. Again, definitely encourage you to give us a call and verify those commissions, as things can certainly change, but those are current at this point. Some unique features of the wealth pay with Equitrust. Again, first 4 tables rated up to standard. You do have the accelerated benefits, and something unique about Equitrust. We saw Baltimore Life with their accelerated benefits. They will pay those out in a lump sum. Equitrust gives you the option to pay those out in a lump sum or monthly, depending on the circumstance. They'll pay them out monthly over 3 or 5 years. Once again, no checks are going to be received by your client from the SPIA payout. That's all taken care of internally behind the scenes SPIA pays directly into the life insurance policy. There's no annual insurance premiums, and the client does have the option to withhold taxes from that SPIA payout. All right, so we've looked at the three main products for qualified single premium life. Who's possibly a prospect here? And there's a number of them. And as we're going through this list, I just want to point out that these events and clients that may fit in these situations here, they may be not only a prospect for a qualified single premium life product that we just looked at. These could be triggers to have that conversation about a traditional single premium life product for non-qualified funds. So just looking through here, I want you to start thinking about your book of business and who might be fitting into one of these events. This could be a great way to go back out and revisit your current clients and update your fact finder and uncover some new assets or uncover a new need. So as you're looking through this list, definitely start thinking about your current book of business and who might fit in here, because it could be a great reason to go back out and see your client and uncover a new sales opportunity. So clients with existing assets they're not going to need for income. So if there's IRAs sitting out there, or even annuities that have been sitting there growing, they don't need the income from those assets any longer. Want to pass those on to later generations? Great prospect for one of these options. Clients that are just turning age 70, so we're going to have the RMD issue. Again, if they don't need those RMDs, they don't need that income, need to be talking about qualified single premium life as an alternative to pass those more efficiently and reduce your client's taxable situation. If a client received an inheritance or CD owners, leave behind money that's sitting idle in CDs or money market accounts. I hear that quite a bit because that's what clients know. They know CDs and money markets to be the safe money alternatives. Well, right now they're getting little to no interest from the bank. They're getting 1099 on that little to no interest, and it's just not an efficient strategy, especially for that leave behind money. So I talked to them about moving that money into a single premium life product. Going to eliminate that 1099 in that case, and pass that much more efficiently and leverage that money and make it work harder for them than in that CD or money market account. Anyone with 10% free withdrawals. So these certainly don't have to be the large big number cases. Obviously that's nice to come across, but if there's anyone that wants to take their 10% free withdrawal from an annuity or take their RMD 1 year and move it into a single premium life, buy some life insurance with it, have something set aside for the beneficiaries tax-free to take care of final expenses or leave a little something in addition. Great simple strategy to accomplish that with your clients. Any existing life insurance policies that are sitting out there, maybe they're older universal life policies that are running out of gas. Those current declared interest rates are low, cash values dwindling down, and pretty soon the client's going to have to start pumping in much more premium into that policy to keep it alive and avoid a policy lapse. Maybe they're not in the position to pay that increased premium, or they're not interested in paying that increased premium anymore. You could take that cash value and 1035 it into a single premium life policy, salvage the remaining cash value from that policy. You're going to eliminate the ongoing funding requirement with a single premium life product, and they don't have to worry about it anymore. They're going to have a death benefit set aside for their beneficiaries. They don't have to worry about the company notifying them they have to pay increased premiums to keep it alive or it's going to lapse. So if they have an overabundance of annuities, so kind of getting back here, there's an annuity sitting out there that's not going to be needed for income. One of these products that we looked at today could be a good alternative if those goals have shifted. So with that, I'm going to open it up for questions, and I know there were a couple that did come through here, so I'm going to go through and do my best to address these. Okay, so one of them that came through asking if this is for qualified money only. The answer to that is no. It's actually available. These products, while they are designed for that qualified money, as we just looked through here on who might be a prospect, if there's annuities out there, maybe a non-qualified annuity, it's out of its surrender period, it's been sitting there for a number of years and has a good amount of growth. So there's a tax obligation on that gain over and above their cost basis, and they want to position this more to a wealth transfer strategy. You can certainly move that non-qualified account into one of these products. You have that SPIA payout. You're going to spread out the tax obligation. Just a portion of that SPIA payment in that instance would be taxable. So just the gain portion would be taxable each year instead of the full amount as it would be with qualified money. So that's a great question. While it is pretty easy to see the need for the qualified funds wealth transfer, it's certainly available for non-qualified assets also. Okay, and then second one, I believe I had addressed earlier here when we were looking at the wealth pay product, but just to reiterate, the SPIA payment. So if the insured passes away during the SPIA payout period, they were asking about the treatment of the remaining SPIA portion. With Baltimore Life and Equitrust, the beneficiary would have a couple of options. So of course, both scenarios, they're going to receive that death benefit of the life insurance policy income tax free. The remaining SPIA payout, the beneficiaries would have an option to either receive the remaining payments each year until that SPIA payout period is finished, or they could receive a lesser commuted value in a lump sum as well. In both situations, those are going to be taxable to the beneficiary. Again, it's going to vary if it's qualified or non-qualified money, but the short answer is they would be taxable to the beneficiary. But they do have a couple of options with Baltimore Life and Equitrust to receive that SPIA benefit if the insured should pass away during that payout period. So another good question. All right, with that, that was the final question. Thank you all again so much for taking some time out of your Friday morning to join me here today. Hopefully this was worth it, got you thinking about some different markets and some possible clients in your existing book that you can go back and talk to about qualified single premium life and present them with this option to address any needs. So if there's anything we can do to assist you out, happy to run quotes, talk with you further about these options and other single premium life. You can see our phone number there, 800-255-5055. Please don't hesitate to give us a call. Be more than happy to help you out in any way we can. I will be making my follow-up calls, so if there's additional questions, we can certainly address them at that point. But once again, thank you for your time. Have a great rest of your Friday and a great weekend, and we will be talking soon.